All right, let me say welcome to our mentorship program. It's awesome to have you around. I'm delighted you choose to take this bold step away from the crowd so that we can walk at the same pace. Like I said in my recent call to action video, I said that if you want to make a most successful journey in Forex, you would need to have someone guide you, have someone lead you, walk you through the path. And I want to say that it's not, Forex is not easy. You must not start with that conception. You must make sure you don't accept that it's not difficult. It's very easy if you play by the rule. It's supposed to be a full course, like maybe a 4 years course in the university or 5 years course. And you want to take, because it's very large, you want to trade the financial market, you want to trade world economics, what's happening globally. That's what's reflected on the chart. So whether it is synthetic, whether it is a currency, or it is whatever asset, so long it has charts, it's simply telling you that it's a global dealings, trades, economics of states and all of that that is being traded. Even Apple has a chart, Twitter does, Facebook does. So it's not just about synthetic indices or something. But generally, Forex is supposed to be a course where you will need to take like for 3, 4, 5 years. But now we've been able to make it simple because what I want to do in this mentorship program, I want to just give you the basics that will make you profitable, because the goal is not to know how to trade or how do I want to put it now? The goal is not just able to trade or ability to trade, rather, is to be profitable. And for you to be profitable, you need just few concepts. So I'm not going to start by teaching you what is Forex, what to know about Forex and other stuff. You have all that in, you have it on Google. You can check it out. You have it on, just go to Google, type it, what is Forex, and you can read all that for yourself. You see, you can read all that for yourself. So I'm just going to try to walk you through the very important things. Let me say the nitty-gritty, what you need to be profitable. That's what this mentorship is all about, what you need to be profitable. I'm not going to tell you stories. We learned a lot of concepts. Like personally, I'm 3 years in this industry. We have had a lot of concepts to learn. There was a time I had to drift to learning Wyckoff, learning divergence, learning a lot of concepts. But I just discovered that to be profitable, you need a very few important concepts. I'm not saying others aren't important. No, I'm simply saying as the journey goes, you can be enlarging your knowledge. You can increase your knowledge base. You can want to study more to have a wider knowledge. But to be profitable, there are just few things that you truly need. The most important things that you truly need. So this is what I want to see how to walk us through. So I sent out a material earlier. Sorry, I've been running on generator. There's no light, so my lights are really low. But so long you can see my screen, we can work together. I sent out this material. This is my lecture material I prepared for mentorship. Only one person has had access to it before now, because I wanted to start the mentorship all at once this year. So, but last year I had to release it to someone who truly needed it, and so this is a fresh course. We just try to put some few things in place. What you really need. The concepts are so much, but what you need to be profitable are the things we want to extract in the course of this mentorship. So like you can see on my screen, what to know about Forex trading, what you should know. Like I said in some of my YouTube videos, I've always insisted that price action, market structure is the foundation. There are a lot of other concepts. Like myself, I started as an indicator trader. If I want to show you my charts those days, you will see a lot of indicators like sacrifice, like mad, a lot of RSI, a lot of uh, so many MAs, you know, if this crosses this and all of that. God bless you. So if you are somebody that tested indicator trading, you know what I'm talking about. I had my chart littered up with, oh my goodness, so much indicators that I began to have headache, aches every night. My eyes were bugging. I had to take treatment because they were just difficult for me to cram. You know, you want to cram RSI 14, RSI 21, MA this, MA that. If this crosses this at this high time frame, man, it was mad. I couldn't cope. I couldn't cope. I cannot count how many accounts that got blown because I saw indicators crossing and I decided to leap into the market. So, but I'm not against that. Those that are making money with indicators, fine, kudos to you. But I discovered in my few years of trading and being with the chart that price action is just the best. Indicators are good, but they lag. Before it will cross on H1, market must have gone over maybe like 100 pips. You know what I'm talking about. Market may have even gone like maybe 150 pips. And when indicator is now crossing on H1, maybe the market wants to make a reversal. And that's why you come in when you came into the market. So they just use you to catch the cruise, reverse on you, and reverses your account for you. So it wasn't a funny journey at all, at all. I'm just telling you my personal experience because this is the beginning of the mentorship course. There are things you need to know to stay put so that when I send out charts, you know what we are up to. So in case you're an indicator trader before, you have had some knowledge of indicators and all that, just forget about them. Just forget about them. You are starting on the fresh note. On the fresh note. The Bible says, behold, I make new things. Isaiah 43. I make new things. So if you want new things, you need to try as much as you can to unlearn the things you've learned before. Then let's see if we can just relearn new things. That's the basis. That's where I want to start from. So this is all you need to know, and we're going to base it on price action, what and what to know. We have the content here, as I outlined here. Number one, the basics. We're going to look at expansion and retracement, the main move, and the reversal. Because if the market is going on making the higher highs and higher lows and all of that, like we used to see, there are always going to be times of reversal. So the main move in the direction of the trend, let me see, trading, okay. The main move in the direction of the trend is the expansion, then we have the retracement. So I think I've shared a few of these concepts. You're going to have that once I give you access to, I'll send the first video, I think by tomorrow, Wednesday or Thursday, so that you can just start watching it. And so let me just show you this. So you have, let's say it's the bullish run. We have something like this. This is the expansion, the main move. Then this is the retracement. So at this retracement, you want to ensure price is coming to the discount zone, 50% below, and then you want to catch it up. So sometimes price can go like this and go like this, and then later come and give you something like this, then before going up. So you want to always wait for this retracement to join in if it's on a bullish movement. And if you see something like this, you'll be deceived if you don't know what you're doing. You might just think, okay, this might be a break of structure, higher high, higher low. No, but this lows has not been tested. So that's why we're going to look at ranges. Ranges is part of that also. We're going to look at that. We want to take the last high. We call the recent highs and recent lows. You want to ensure price is trading in between the recent highs and recent lows, the lows, the high. So until price makes another high, this low is still very valid. So until price comes here, if price has done this place has not been tested. Price didn't come to the 50%, so it must definitely come there. Sooner or later, it has to do with just when, but not that will it come there. So you want to play within the range and stuff like that. So that's that expansion retracement. Then we'll talk about Fibonacci retracement. We're going to be taking a fib to measure where are we expecting price to come. Price will always come below. Once it comes below 50%, then we need to wait for a distribution on a much lower time frame. We're going to look at that when we start diving in how to use Fibonacci retracement, the premium zones and discount zones. These are some of the things we've talked about in the free classes. So the next we want to talk about breaking market structure. This is very important because some persons take a shift in character to be breaking market structure. Breaking market structure will have to establish a break of these lows. This is the last low following the range. This is the last low, this is the last high. So until price breaks here, price has not broken structure. So sometimes price can give you this. Let me remove this fib now, or let me leave that and put this. Price can give you this. This is simply a shift in price. This is not a break of market structure, BMS. No, this is a shift in character. So you want to play something like this. Let's say you want to play around here. And what did price do? Price came and cleared you off because it was not a break in market structure. But if price has broken this, then this place becomes valid because price is coming back to play somewhere around here, that the other block or the institutional mitigation candle rather, and then you can now seek to take price down. But if price has not broken structure, you want to just say, okay, market is selling, we are past that level. That's why this mentorship is there. You want to know the difference between a shift in market structure and a break in market structure. Then the range high and the range low, which I just showed us. Then failure swings, everything is there. Then we're going to look at market structure, different types. We'll talk about liquidities and all of that. Let me go back to the Telegram group. We have the timetable here. On Mondays, we're going to be looking at market structure trainings. Mondays are for market structure trainings, 7 p.m. Market structure trainings. When I'm done, we can adjust this time. We can just maybe drop some suggestion about this time, especially Mondays, if it's not convenient. We can bring it to the day. Then on Tuesdays, we'll be talking about market patterns. And that's where this content number 3 comes in. We're going to be talking about all the types of liquidity. The tops, double tops, triple bottom, double bottom, head and shoulder, all the different types of liquidity you are going to find on your journey to become profitable. We're going to extract them. Now, if you don't know liquidity, you might fall a prey. Like, let me say 50S. I dropped this on the general group. Exactly. Okay. 50S, I dropped it. When I dropped it, price hasn't come there. But I knew what I was expecting. So I waited patiently. And while others were skeptical, I got in. It doesn't matter. I don't really enjoy trading all the time. You should have time with family. You have time to do other things you like. But if you understand market structure and liquidity, you can easily coming. I dropped this chart earlier, like what you can see. We have a high, we have a low, we have a high, and we have this low. This low is an established break of structure for me. It's an established break of structure because price closed below this. You can see the body closed below the wick. The body of these candles closed below the wick. That was one. It didn't stop there. Price closed below this. This was another structural point. Price closed below this. So it's another structural point. So this is complete break of structure, break in market structure. So now we need to look for where to come in. So if I go to the 4 hours, like what I shared on the general group, let me just show us. If I go to 4 hours, you will see what I was anticipating. First, price came and gave us something like this. Yeah, I saw this as liquidity. This was a double top for me. So this just came, but this is a double top for me. This liquidity. So I knew price was going to clear it off. So first entry, I have my first entry at this place. My first entry at this place. Stop loss at this place. Let me see whether it gave me 1 to 3. I think it did. It gave 1 to 3. I played this first one. Stop loss was here. And the price came. It gave me 1 to 3. Yeah, it did. I want to get the exact point. Yeah, price gave me a 1 to, let me say 1 to 4. This is 1 to 59. That was the first move. When I saw price retracing, I knew that price was coming for this liquidity. I shared it in the group. Yeah, I did. So if you were in the group, you will see that I shared it. It's going to be far. I think I did. Okay, this was it. Yeah, on the deal I said if price should take away, weak out this liquidity, I should look to sell from here. You can see that. So it took, this is daily time frame. It took days before price came into that place. It took days. Let's go back to the chart. Let's see. This was this H4. Let me go back to the daily. It took days, but I was just waiting for it to come. When I dropped the analysis, I think price was still on this candle or so, maybe this candle. And then it took days before price came. What did price do? Price just wicked out. Price wicked out. There is this whole candle, though there's a little imbalance here, but my mind is open. I want to play what I'm saying. I want to just play what I'm saying. That's trading. So let me go back to H4 and see. So if you don't understand the concept of liquidity, you will enter into this kind of traps. I saw this double top, so I knew price would be attracted to come and clear this liquidity because of this institutional candle or smart money cube that is inside of this place. So I knew price was coming to play it. So I was waiting, and then price cleared that liquidity. All this is my place of interest. All this was my place of interest. All this. So price came, first of all, gave us a 1 to 3. Now my next point of interest was here. All this was my next point of interest. So taking out this one as liquidity, price should trade into this candle here. And price came wicked out. Let's go to, let's say 15 minutes. Let me just show you what has happened here. I've taken partials on this already. So if price wants to come back, that's not an issue. Already, you are just trading what you see. If price gives it to you, just trade it. If it takes you out, you are not at fault. No, you are not at fault. Look at that, liquidity was cleared. So to me, this is the liquidity cleared. Then what did price do? Price has broken structure again now to the downside. I think you can see that. Price has broken structure to the downside. But after clearing this liquidity, watch, price gave us a high, gave us a low, gave us a high, gave us a low, broke this structure here. Price created another high and now gave us a break from here. So this is another break in market structure. So I'm not going to know whether I'm correct or whether price is going to take me out or so. I'm just playing what I am seeing. So what's the next thing? I want to wait for price to retrace back to all of this move, all of this move, all of this move. Because of this week, this was the last move that led. So I'm waiting for price to come to all of this move. If it comes there, fine. I take my sell. I'm seeing this queue, but this is liquidity here. I want price to come back in here. But look at what has already happened here, how I traded this. First, permit me to go to a lower time frame. Lower time frame, please. Let me go to, so I can fetch the 5 minutes that are good. I played something here. When I saw this, because of my knowledge of what's it called? I traded Wyckoff a little, Lance Wyckoff theory a little. I knew that if price broke here, I was looking at playing this place, all of this move, because of this imbalance you can see here. So I wanted playing here, but price came. I didn't play this, but I was looking at playing this place. Price came and blew off. So immediately price blew off. I knew that the next break of structure or shift in character will be the play. So I'm going to show us my entry. I'm going to show us my entry. So I knew that so long price has taken this, this was liquidity already captured in this place, liquidity captured. So price, any other shift in character, I'm going to explain to us, or change of character in the course of the teaching, how to catch this kind of moves. It gives you fast entry. I knew any other movement was going to, let me try to remove all these ones. Okay. So this was the break for me. And then I was looking at this imbalance. I saw this imbalance. It was so clear. It was so clear. This is the imbalance I saw. Okay, I think I marked it to this side. Yeah, maybe to this side. I believe you can see that imbalance. So I knew because price has broken this is a shift in market structure. A shift is giving you like a heads up. Yes, a heads up. Like it's telling you that. So don't get it missed, please. Now, this was the first move. Price gave us this, high, low, gave us a high, close below this. This was the break of structure. So you'd have been expecting to play this imbalance or this block. And price came and cleared you, went this way. All these things are happening around your zone of interest. Remember, so if we're not trading it in isolation, we're trading it because it's in our zone of interest. So this is Wyckoff. You don't need that. I'm just telling you. So this is UTAD. UTAD AR alternative alternate rally. Then we get to the spring. So I knew that so long price did this first one. This was the manipulation. People that entered here, declared their stop loss, swept all of them, and then change character. So long I saw this change of character, I knew that price was coming for this imbalance. So what did price do? Price came in beautifully into that imbalance and started going down. So I had the first entry on that imbalance. Yeah, I like playing the open of the imbalance. I played the open. I don't want price to leave, so I just simply played the open of the imbalance. Now let's see what this has, what this is already. This is already a 1 to 10. You can see this is already 1 to 10. Then you reach like $10, you are making $100. $1, you are making $10. This is a 1 to 10. So let me go to, I think this is the general group. Okay, this is the general group. Let me see. Okay, this is the good. This is 15 minutes. You can see what I was telling you. This was the first break. If you can see very well, this was the first break. And then this was the manipulation that swept this liquidity. So what did I do? I simply had a mark on that imbalance and I played the open. Look at it. It's the open. I love playing the open. This is the lower time frame. So the stop loss around this place, I think is not close to even maybe 10, 20 pips. Yeah, 10, 20 pips. So I just played the open. You can see where the trade enter is the open. I didn't want to wait. If it hits me out again, no problem. But all this thing is happening within my point of interest, my zone of interest, the area where I'm expecting price to sell, because that liquidity has been captured. So I just play this entry here, stop loss here, and look at all this move. That's what we're seeing here. That's about 1 to 10. So it's just simple. Just play what you are saying. You don't want to know whether you are right or wrong. Or is it going to hit stop loss? Is it going to take me out and all of that? However, if it takes me out, that's why you have already predefined your risk. You've already outlined this is what I'm risking. So while the story of okay, if it hits me out and all of that, my life is not hit, it's the chart that is hit. So you just have to treat your trades like that. So let me remove this. I'll go back to this. I'm just showing you what I expected. Okay. Yeah, you want to say something, Mr. Friday?
No.
Okay, so all these things are happening around our zone. That is why you have that confidence. So first, know the zone. And then, so we're going to look at all that concepts of liquidity, because liquidity is what drives the market. Like I said in one of the liquidity videos on the YouTube channel, I said, if you don't know what liquidity is, probably you are going to be the liquidity, because liquidity is what the banks uses to fill their orders. Like a normal market, if there are buyers, there should be sellers. Or if there are sellers and there are no buyers, then sellers are going to just waste all their time in the market. So the market must be balanced. So the chart has been made in such a way that there must be a balance. So if the banks wants to take a trade and what's it called? The orders are not filled, they create tons of liquidity around it. So you can see them moving around one region, moving around one region. They are just trying to, okay, people will enter here, they sell down, and they are making money. All of a sudden, look at this rally up. This rally cleared everybody here. This was the candle that cleared everybody here, rallied down and broke this structure. So right now, if I want to take this trade again, there are just two entries I'm looking at here. I know you can see this imbalance. You have that eyes already. So there are so much imbalance. This is the closest. This is another imbalance, but we don't play this. I don't play this. I'll play this top. I'll prefer price should come all the way to this place, and then I seek to look for a 1 minute change of character to go down so that I can get a lower stop loss. It's just the same thing. So we're going to look at the concept of liquidity. Then we'll talk about other blocks. Other blocks are simply the mitigation candle or institutional candle. But as time goes on, I'm going to tell us the difference between a mitigation candle and institution candle, because all institution candles are mitigation candle, but not all mitigation candles are institutional candles. So we're going to look at the difference and how to be able to trade them properly. Then number 5, we look at London session, New York session, Asian sessions, and all of that, manipulation. So I'm going to look at that. Like I said, I do majorly EU. So we're going to use both the EU and DXY to check out all these things. Then we have return to order block and all of that. We look at all these other confluences. Then, harnessing all the tips, harnessing everything. That's what I just treated it. So we have a lot of chart examples. So you have something you can start reading, start studying. When we don't have calls, you study. I'm always available. If I'm not online, I don't think I spend maybe 2-3 hours without being online. I don't think so. I don't think so. I'm always online. If I'm not online, sorry? Maybe I have a program, or I'm in the church, or having some spiritual stuff and all of that. But if you drop a message, you will find me responding in the shortest time. So we have a lot of chart examples here you can study. I try to make it so easy, and then you can just have everything. So just start studying it, break a market structure, start studying it, return to order block and all of that. We're going to look at everything step by step, step by step. And as it is now, since we have started the mentorship, this group is still going to be there, but I'm not going to be, we're just going to be dropping our trade ideas, dropping all our charts, all these things that played out and everything. We're going to be dropping them here also. I'm going to concentrate more on this mentorship so that I can take you through step by step. So by the timetable on Thursdays, we'll have trade calls. We look at charts, we look at, okay, what asset are we trading? And I have my style. I can look at so many charts, but I want to focus on maybe one per week or two per week, just something like that. So I'll begin to show you these styles that I use in my trading. Then on Saturday, it's going to be chat time. This is simply student work. Whatever we have done all through the week, on Saturday, I'll bring you up on the call. I'll make you the host of the call. You will share your screen. So if you don't have a laptop, it will be good if you have one. If you are good with your Android device, fine. If you have a laptop, just ensure you go to Trading View. You are good with your Android device. You don't have a laptop for now, fine. You are just starting up. You can always get that as time goes on. Then you can also use your phone to either teach or annotate. It's not going to majorly be teaching per se. It's going to majorly be, okay, this is what I was looking at within the week. I was checking out the extent. It didn't play out or it played out, stuff like that. I was looking at this. It gave 1 to 3 and then it reversed. And you just tell us what you, like you just share your experience with us in the course of the week. Because like I said, trading is not difficult if you give time to it. Yes, it's not difficult. It's a full course. So whatever you teach, if we look at the first topic or the first content, what I expect is that you go straight to the chart to go and practice it, to go and check it out. You go and back test. Okay, this is what he showed us, this is what he showed us. Let me also check it. So by that Saturday, you're able to show us, okay, this was what I did, what I checked. This is the outcome I had. This is what I was able to discover. So I need light in this direction. I need more explanation in this aspect. Then we can look at that. So I made it 7 p.m. so that we can have enough time. That Saturday, we can have like 2 hours, 3 hours to just check it out before I go to bed for the weekend. So I think that would be all. You have the course work already with you. So start going through it. There are so many things you are going to learn. And I want to say this, please, this course is strictly for mentorship. It's not to be shared. For now, I think it's not to be shared. It's strictly for mentorship. It's for your study. It's for your study. It's about 153 pages. So it's big money, but as time goes on, you have money. I prefer you print it out, bind it, so that while you are looking at the chart, you can have something you can always be looking into. You can just print it as one of your resource material. Print it out, have it on your table or your reading table or whatever, so that from there it becomes easier. So this is the pathway we are going to go in this mentorship. We'll be having our first trade call on Thursday by 10 o'clock in the morning. Thursday, 10 o'clock in the morning. I'll walk you through the charts, and then by Monday, we'll have our market structure training. So I'll allow you to maybe ask 1 or 2 questions, then we can talk about this time. Maybe we can just reschedule some of the time, especially Mondays. I'm thinking of bringing it to morning, so we can just speak on that. Over to us. Let's go. Have a question or you have something you want to say? Go ahead.
Thank you, sir.
Yeah, Mr. Friday.
You can hear me, sir?
Very well, very well.
Yeah. All right. You talked about break of structure and change of character.
Yes.
In order to these 2 concepts are really confusing me. So I don't know. I want you to throw more, just show more example of it. The break of structure and change of character.
Okay. All right.
Thank you,
Break
sir.
break of structure is basically when the market breaks above the previous high or the previous low. A structural point. I'm talking about break of structure now. So let me take you to the chart. This is VIX 25. As you can see on my screen, this is synthetic VIX 25. So let's talk about break of structure now. Price was giving us something like this. This was a high. This was a low. This was a high. This was a low. This was. I'll want to make it so wide so that you can see. Okay. Now let me minimize this. Okay, you can see clearly, right? Okay, this is
Yes, sir.
a break of structure. This is this is daily time frame. So this is a break of structure. First of all, let me annotate the range. This is the range, down range, and this was the top range at that time. Okay,
Okay.
top range. This was the top range, range high and range low, whichever one you want to call it. This was top range before all this price action happened, and this was down range. Sorry, I want to paste this. Okay, it's there. Just give it some few minutes. This is the down range. Okay, so we have this. This was top range and down range on the daily. If price breaks below this, price give us a high, give us a low. If it has created another high, just like what you see here, and it breaks, then that is a break of structure. So watch what price did. The price gave us this. Gave us this. This was the low, and then price gave us this high, and then price broke down. This was a break of structure. This was a break of market structure or break in market structure. Okay. Now, where you see a difference, or where you can, I'm going to go to the 1 minute, 5 minutes, so that you see the difference. That's a clear break of structure because that is a break of the previous high. So market since then started giving us this. We analyzed this in one of the calls earlier, started giving us this high, lower low, lower high, lower low. We cut this because I gave this out on the call. We cut this, and price started going down since then. So price has been moving in this direction. Okay. Now I'm going to go to a lower time frame so that you see. Let's see what is happening here. I'll show you a shift in market price. Let's go to. Let me see if I can fetch 5 minutes. 5 minutes. Okay. 5 minutes. 5 minutes. All right, this is 5 minutes. You can see clearly, right? This is 5 minutes.
Yes, sir.
Price has been buying, buying, buying. So maybe I should go to 15 minutes. Let me go to 15. Yeah, 15 minutes should be fine. Let me go to 15 minutes. 5 minutes is too small. So that you understand the shift in price now. Remember, this market was bearish, so price has been coming down from all these sides, this way, give us watch. Price was having some smaller movements. There were smaller movements here. You can see there were smaller movements. And price came Give us this, closed above this. If I'm right, yes. Price closed the body. I'm going to zoom out. Then price came back. So this was a break of structure. Let me be sure if the body closed above. I want to be sure the body closed above so that the body, what did you say? This body closed above. Is that true?
Yes, sir.
Okay, you can see it clearly, right? I had to zoom out very well so
Yes,
I
sir.
see. Are you seeing that body closed above it? So this is a break of structure or break in market structure. So price needed to come back into some form of stuff here. If you go to that 30 minutes, you see where price came into here. Maybe a cube or an imbalance. I can't tell except I go check it out. So price break. Now, what is the shift? This a break in market structure. Why? Because this was an established high and this was an established low. So price gave us a higher high, gave us a higher low. Now, tell you that market has shifted from a bullish, bearish structure to a bullish structure. Sorry. So now let me show you a shift in market price. I'm going to use this same place. A high, a low. Follow me, please. A high, a low. A high, a low. A high, a low. And price came and closed above this. Price came close below this. This is a change of character. Why is this a change of character? Because the major higher low is this. This is the major lower high, sorry. Major lower high, major lower low. As at this time, price has not closed above this major higher low. This was the major higher low. Not this. These are just sub structures. Structures inside structure. Because price is not going to give you this kind of movement. When we are teaching, we can just give all these drawings. These are just for drawing purposes. In the real chart, you're going to see movement like this, movement like this, movement like this. This is what you're going to find in the real chart because they are candles. One candle on the 1 second will be 60 candles in 1 minute. So 5 minutes candles should be like almost 30 candles or thereabouts. You know, a candle on 15 minutes represents about 5 candles on either 3 minutes or, you know, just like that. So before you get one candle on daily, that candle should be about 4 hours candle, let's say about 12 or 8 or so to give you just one. So price will keep giving you all this kind of movement till it gets to that last high. So we call it a structural high. You get it now? So until once price break above the last structural high, which was this for me, this was the last structural high before this, and price closed. This is the break of structure. But here, we are going to discover there were some small stuff around here. This were simply shifting price. It's telling you that this is a change of character. Market wants to shift. So the bullish movement closes below this small structure. Because if you check, there are small structures inside of this place. Can you see them?
Yes, sir.
Okay, so price close below this. This is a change of character. So if this is a change of character, you get this on 3 minutes, 5 minutes, then I will show you how to also play it. Change of character. Now, what we do in change of character, we want to find out this change of character at our point of interest. Like what you saw on this 50. Was it 50? Yeah, 51s. I showed you on 5 minutes, there was a change of character. It was not a break of structure. I played the change of character. That's what I showed us. Come and see it. This was the last structural high. Look at it. This was the, okay, this was the last. Let me take this as my high, my low. This was the high. This was a higher high. So this is the real, I think this should be the real, yeah, this is a real low. So this was the last structural point. So until price breaks here, closes below here, a break of structure has not happened. because this was the last high, high, low, another higher high because the body closed above this, and then price should break below before I'll talk of a break of structure. Are you getting it now? But what did I now play? I simply played this place. This was a change of character. Because all these things you are seeing is happening at my zone. They're happening at my zone where I wanted price to come to on the daily. Don't forget, it's happening at my zone. So I waited for this. These are concepts that are easy to play once you understand the main concept. I was waiting for price to come to this zone. You see that now? This was the zone I was waiting for price to come. Clear that liquidity, the thing that was sitting around here, and then we go down because I was looking at this Q here, this Q. We go to 4 hours. This Q is what I was looking at. Okay, I think this was the Q. This was the liquidity I spotted. So I wanted, if price takes away this liquidity, I'll wait for a change of character. So, and that was it. Did you understand now? Is it clearer?
Yes, sir. Yes,
okay. Sir. So if you come to your point of interest, you can now seek to look for a change of character. Once you get a change of character, you don't want to find out, don't wait to find out is it going to work out or not. Once there's a change of character within that place, play what you are seeing. Play what you are seeing. So this was just the play. And price has been going down. See, because I knew if price has changed that, price will definitely come and break this structure, which price did. And when price broke this structure, look at what happened. Look at this body. Price broke this structure. Price didn't want to come back to this place. Price just feel the imbalance. There was imbalance here. Price just feel this imbalance to this place. This imbalance. Price just feel it, and then off we go. And price went down. So from this one, while others are expecting, okay, price will trade back to this place, but smart money traders, we've taken like 1 to 10 already. You know what 1 to 10 means? You are risking like $3. And you are taking like 30. While others are waiting for price to come. Then at 1 to 3, what do? You take partials. At least 1 to 3, yes, take partials at 1 to 3. Allow trade to run, break even. How do you break even? Bring stop loss to entry. Then it becomes a risk-free trade. Then you wait. As it keeps going, you start trading stop loss gradually. And here we are. You start, okay, you can bring stop loss here. Later, I bring stop loss here. Later, I bring stop loss to the next high. Bring stop loss to this high. Price went down again. You brought stop loss to this high. Then price came and took you out. So if price came and take you out because you trade stop loss, let's say price took you out on this high. That's around 1 to what? I can't see it again. It says out loud. That's around 1 to 8. That's around 1 to 8. That's very cool. Each $1 I make $8. That's fine. That's fair enough. So you must wait for it to come to your point of interest. So we're going to look at that in the course of the teaching.
No, sir.
Okay, any other question? Let's talk.
I think it's okay. It's okay for now.
All right, where is my other Mr. John? Mr. John, are you still there? You haven't said anything. You have any question? Mr. John, are you there? Can you hear me? All right, this is just a welcome call. Thank you for taking the bold step to make something out of Forex. We're going to go on this journey together step by step, step by step. I'll bring you the different videos and with assignments, which I'll sit on myself or mute me. Did I mute anybody? I don't think I did. Sorry. Send a message that you're muting. Okay, Mr. John. Okay, sorry. I didn't know I muted you. Sorry.
Hello, hi guys.
Sorry, I didn't know you were on mute. Sorry.
Yes, yes, yes. No,
Oh,
no, it's fine.
I'm
No,
so
no, I
sorry.
just wanted to say I'm looking forward to the course, and yeah, it's very exciting the material that you've already, mentioned over there, and yeah, looking forward to going through it as well. I
De-
think for me, what might happen is that I may be unavailable on certain days because of work and things, because I sometimes work night shifts and during the day, so it may clash, but I'll definitely watch the recordings, so I can stay abreast of what's happening in the sessions there.
Definitely, definitely. Then you can always drop your call and then I will definitely attend to any questions. So this Monday, 7 p.m., is it cool by us or do we bring it to 10,
No,
11?
no, 7 p.m. on Mondays is okay. It's
It's
okay.
okay. All right. Okay.
I mean, 7 p.m. Monday.
Because this timetable is what others are still going to follow. So if we agree on it now, that's what everybody will just work with.
So is hello, sir.
Myself or Mr. John? Yeah, Mr. John.
Hello, hello, sir.
Yes,
The 7 p.m. is okay by you, right? For Mondays.
yeah,
Eh,
it's fine for me, yeah.
okay, okay. It's all right. So we're going to be taking out, just take our time. If you got the money, you can print out that material and start studying. If you have access to maybe a system on your phone, you can just open it up and start going through it. We'll be taking the lectures one by one, step by step, so that within the um, shortest time, you'll be able to see what we are seeing. That's just the point. You see what we are seeing, and then you can take trades we are trading. When we get to some certain level, then we can now talk of you funding your account and taking our trades directly. Thank you so much. I'm still going to drop this for others
Okay.
that will be coming in.
Hello,
So you want to say something? Go ahead before
hello,
I
sir.
bring the call to an end. Yeah, go ahead, sir.
Yes, I want to look at this Tuesdays and Thursdays time.
Okay.
I don't know. Can we? I would have of the opinion that we shift the timing to evening time.
If
Evening will be okay when we just come back from our daily finding
daily
and just come
work and
down
all of that.
and look at
Okay.
it. Evening.
Okay. So
Hello?
what time in the evening do we take? Eight,
Like
nine,
7, 8
7, 8.
evening PM. Will be okay.
Okay, I think I'll go for
That's my
8.
opinion. Yeah,
I think if
7, 8,
8
9 will
is
be okay.
fine, all right. If 8 is fine,
Okay.
Mr. John, can you make
8.
input? Is 8 okay for the Tuesdays and Thursday calls?
Uh, Tuesdays, yeah, I'll probably have church on Tuesdays. I have it from my time. It's 7 to 10 o'clock in the night. I got church, so
Okay.
it'll clash with me. But on Tuesday, I probably have to watch the recording.
Okay,
Yeah.
okay. How about Thursday?
The Thursdays is fine, but probably 2 o'clock, and I don't know, 2 o'clock in the afternoon suits the guys. 2 o'clock, 3 o'clock, or even late afternoon. How much of late afternoon suits the guys?
Okay. How about we just make the okay, let's make the Tuesday 8 p.m. Mr. Friday, if that's okay by you. Then the
Yes, sir.
Thursday, maybe we'll make it it's 2 o'clock. Okay, Thursday. Yeah, Thursday.
Yeah, I think on Thursdays that 8 o'clock is fine on Thursdays, the evening. I think as Friday was saying, 8 o'clock is fine on Thursdays.
On Thursday. Okay, okay. We'll make it
Yes.
to 8 o'clock then.
Okay.
Let's make
Okay.
it
Okay.
I'm in
8
South
o'clock.
Africa, so it'll be 9 o'clock my time.
Yes, yes. Nigerian time, that's 8 o'clock. I'll write it there so that you now check out your own time. Just 1 hour difference, you can hop on. I wouldn't want you to just watch recordings. I would want you to also be part of the chat. And the recordings are fine. You will get them very well. I'll definitely upload them. But at the same time, it will still be important. You don't just miss out of everything. Everything. Don't just miss out of everything. That'll be all right.
Yes.
Good. Good, guys. Thank you so much for hopping on. You are welcome to our mentorship program. And we promise to give you value for your money. Thank you so much. God bless you.
Thank you, sir. You're welcome, sir.
Have a good
Yeah,
night
thanks,
rest.
guys.
We'll be
Yeah, enjoy your
seeing
evening. Bye, guys.
on Thursday. But I'll be dropping something on the chat later. You can just check it out.
Okay. All right.
It's all right.